Today, we're talking about a company that most everyday investors have never heard of, but one that's quietly changing how money moves, how loans get approved, and how banks make decisions behind the scenes. The company is called nCino, ticker symbol nCino, and they're one of the key players in the emerging world of cloud banking technology. If you've ever applied for a loan and wondered why it takes so long, or why it feels like your personal information gets passed between 10 different departments, nCino exists to fix that. They're not a bank. They're the software behind the bank. But before we dive in, let's zoom out for a moment and ask, why is this sector important? Banking is one of the most heavily regulated, deeply entrenched, and technologically outdated industries in the world. Yet, it handles trillions of dollars every single day. As more banks go digital, move to the cloud, and try to catch up with customer expectations, companies like nCino stand to benefit. We're talking about a market opportunity measured in billions of dollars, with enormous potential for efficiency gains, cost reductions, and regulatory improvements across the global financial system. So next big question. Why are investors paying attention to nCino right now? This is a company that started as a small North Carolina startup, built its platform on Salesforce, went public in 2020, and is now used by more than 2,700 banks and credit unions worldwide. They've been growing, acquiring, and expanding their AI and compliance tools. Wall Street likes to call this kind of stock a FinTech infrastructure play, something that enables the entire system, rather than competing with the banks themselves. And while their stock price has had its ups and downs, their customer base and product depth keep expanding. Before we go any deeper, let's pause for a second to explain what a SWOT analysis actually is and why we use it here on Tech iSpy. SWOT stands for strengths, weaknesses, opportunities, and threats. It's one of the most widely used frameworks in business and investment analysis. What we're doing is giving you a structured, four-part lens for looking at a company, not just on its best days, but also on its worst days, and everything in between. We'll cover what the company does well, where it struggles, where the growth paths lie, and what risks could take it down. This isn't hype. It's not fear-mongering. It's just a clear-eyed, balanced view to help you think like an investor. Quick reminder before we jump into the SWOT itself. If you enjoy this kind of deep dive analysis, please hit like, subscribe to the channel, and tell us in the comments what you think about nCino or any other FinTech stocks you're watching. And if you want to go deeper, check out the entire Tech iSpy universe, including our growing library of Kindle Unlimited books, where we cover dozens of tech sectors and stocks in even more detail. You'll find links below. Alright, let's get into the SWOT analysis for nCino. nCino's greatest strength lies in its position as a foundational layer within the digital banking transformation movement. This is not a flashy consumer-facing app or a trendy financial product chasing short-term growth. It's enterprise infrastructure, deeply embedded within the day-to-day operations of over 2,000 financial institutions around the world. From regional credit unions to globally recognized banks, nCino's technology now sits at the center of critical workflows that determine how money is lent, how risks are assessed, and how compliance standards are met. Their entire platform is built on top of Salesforce, one of the most established and trusted cloud ecosystems in the enterprise software market. This choice of infrastructure wasn't accidental. By anchoring their technology to Salesforce, nCino automatically tapped into an existing developer ecosystem, a battle-tested cloud environment, and a security framework that meets the high regulatory standards demanded by global banks. This alignment with Salesforce also makes it easier for bank IT departments to approve, implement, and scale nCino solutions without fighting against unfamiliar or untested technology stacks. One of the most powerful aspects of nCino's business model is its modularity. Banks can start small, implementing a single process like commercial loan origination, and later expand across retail lending, customer onboarding, or treasury management. This land and expand model generates sticky revenue streams. Once a bank starts using nCino in one department, the operational and financial costs of switching to a competitor become significant. This is especially true for institutions that have spent months training staff, configuring workflows, and integrating nCino's API layers into their existing core banking systems. The company's internal product development focus shows a clear understanding of real-world banking pain points. Every new module released over the years has addressed a bottleneck in the financial process chain: faster loan decisioning, automated compliance checks, AI-powered risk assessments, and digital document management. These aren't nice-to-have features. They're mission-critical components that directly affect regulatory audits, customer satisfaction scores, and profitability ratios. Their acquisition strategy also reflects a highly targeted and strategic approach to growth. Rather than broad diversification, nCino has made surgical acquisitions designed to fill specific gaps in its pushed nCino further into the mortgage space with a mobile-first, consumer-facing solution that complements its business banking tools. Other acquisitions like Visible Equity and DocFox have strengthened its analytics and onboarding capabilities. From a sales and revenue perspective, nCino benefits from long-term subscription contracts, which give it a predictable revenue base. This software as a service model aligns closely with investor preferences for recurring revenue streams. Additionally, because nCino sells primarily to large enterprises, its average contract value tends to be higher than smaller FinTech startups serving individual consumers or small businesses. One of the less obvious, but incredibly important, strengths nCino has built over time is trust. In the banking world, trust in your technology partner isn't just about product features. It's about security audits, regulatory compliance, disaster recovery protocols, and an established track record of uptime and reliability. Banks are famously risk-averse when it comes to vendor selection, especially for systems that touch credit risk models and customer data. The fact that nCino has become the provider of choice for institutions like TD Bank and Santander speaks volumes about its credibility in the market. Finally, nCino has been able to position itself not just as a technology vendor, but as a long-term digital transformation partner. Its relationships with consulting giants like Accenture and Deloitte give it reach and influence during large-scale bank technology overhauls. These partnerships mean that when a bank signs a multi-year, multi-million-dollar technology upgrade plan, nCino often finds itself written directly into the project scope. In the fast-moving world of FinTech, where many startups rise and fall within a single funding cycle, nCino's quiet, steady, infrastructure-focused approach has allowed it to build something that's both sticky and defensible. It may not grab headlines like consumer payment apps or cryptocurrency platforms, but in terms of long-term enterprise value and institutional adoption, nCino's strengths are undeniable. For all of nCino's strengths, There are clear and undeniable weaknesses that investors need to confront. First and foremost is the company's reliance on a limited customer base within a slow-moving, heavily regulated industry. While nCino works with over 2,000 financial institutions globally, the total addressable market is finite. There is a cap on the number of banks willing or able to adopt large-scale digital transformation projects at any given time. Once a bank has installed core modules from nCino, the upselling and expansion opportunities naturally start to taper off unless the company continues to release compelling new features or aggressively enter adjacent markets. Their dependency on Salesforce as the backbone of their entire technology stack is both a strategic advantage and a significant vulnerability. Should Salesforce's business model, pricing, or technology direction shift in a way that doesn't align with nCino's needs, the ripple effects could be severe. Any disruption at the Salesforce level, be it outages, security issues, or changes in partnership terms, directly impacts nCino's performance and reputation. In the long term, this level of dependency creates a risk scenario where nCino's fate is partially tied to decisions it does not control. Growth through acquisition, while strategically smart in many cases, has also introduced operational complexity. Integrating multiple companies with different cultures, product architectures, and customer bases creates execution risk. Each new acquisition means more engineering time spent on system interoperability, more sales cycles focused on cross-selling, and more marketing resources diverted to rebranding and integration. The larger nCino becomes, the harder it will be to maintain a clean, simple product roadmap. Financially, the company has struggled with profitability. Despite growing revenues, nCino has posted multiple years of net losses since going public. Investors focused on near-term earnings often raise concerns about when, or even if, the company will deliver sustained bottom-line profits. The pressure to hit quarterly targets while still investing heavily in R&D and customer acquisition is a constant balancing act. Any slowdown in revenue growth could quickly expose the company's thin margins and trigger negative investor sentiment. Another underappreciated weakness is market perception. Outside of banking circles, nCino remains relatively unknown. This lack of brand visibility can become a problem when competing for talent. The best engineers, data scientists, and AI specialists often gravitate toward companies with stronger consumer or investor profiles. If nCino struggles to attract or retain top-tier tech talent, especially as it tries to scale its AI and machine learning offerings, its long-term product competitiveness could suffer. From a competitive standpoint, nCino's technology, while robust, is not immune from disruption. Core banking providers, including giants like Fiserv and Temenos, are all building or acquiring their own cloud-native modules to catch up with digital-first expectations. In some regions, especially outside North America, banks prefer to work with local software vendors who offer more customized or culturally aligned solutions. nCino's expansion into these international markets has been slow compared to its domestic growth, exposing a geographic concentration risk. The regulatory environment also introduces ongoing uncertainty. Banking software vendors are constantly at the mercy of changing compliance rules, data privacy laws, and international data sovereignty regulations. For a cloud-based solution like nCino, any major shifts in rules about where and how customer data can be stored could create costly re-engineering projects or limit its addressable market in certain jurisdictions. Finally, recent history has shown that nCino is not immune to reputational risk. The antitrust lawsuits and insider trading allegations regardless of legal outcome, have left a public record of litigation that competitors and prospective clients may scrutinize. Even though the company has moved past these issues, the perception of vulnerability remains, especially among more conservative bank clients who value stability above all else. In sum, while nCino presents a compelling growth story in the digital banking transformation space, its weaknesses, from platform dependency and financial pressure to operational complexity and market concentration, should not be overlooked. For investors, this is a classic case of weighing long-term infrastructure value against near-term execution risk. For nCino, the most obvious opportunity is the global push towards digital transformation in the banking sector. Traditional financial institutions, regardless of size or geography, are under relentless pressure to modernize. Whether driven by customer demand for faster digital services, regulatory bodies enforcing stricter compliance standards, or internal cost-cutting mandates, banks are spending more on technology now than at any previous point in the last 2 decades. nCino stands to benefit directly from this shift, as financial institutions search for proven cloud-native solutions that can be deployed at scale. One of the biggest near-term growth avenues lies in geographic expansion. While nCino has made significant inroads in North America, its international presence is still relatively small by comparison. Markets like Europe, Asia-Pacific, and parts of Latin America are beginning to embrace cloud banking platforms, but many remain underserved. Regional banks, especially in emerging markets, are now facing the same digital expectations from customers as their counterparts in the United States. As regulatory environments in these regions start to catch up with digital norms, nCino has a window to establish itself as the default solution for cloud-based bank operating systems. Beyond geography, there's a structural shift happening within banks themselves. The emergence of specialized banking verticals, such as green finance, embedded finance, and digital-only banking units, creates demand for more modular and adaptive software solutions. nCino's open API framework and its Salesforce Foundation put it in a strong position to offer customizable solutions tailored for these new business models. For example, a bank launching a digital-only lending division could roll out nCino's commercial loan origination tools without overhauling its entire tech stack. Artificial intelligence and machine learning represent another major opportunity. The company's nIQ product is still in its early stages, but there is a clear market appetite for AI-driven underwriting, fraud detection, and operational risk management tools. Banks are no longer content with static data reporting. They want predictive analytics and real-time decision support. If nCino can successfully deepen its AI product offerings, it could increase its value per customer and open up cross-selling opportunities into departments focused on risk and compliance. Strategic partnerships offer another growth lever. nCino already works closely with global consulting firms like Deloitte and Accenture. These alliances could be further expanded into formal joint go-to-market initiatives, allowing nCino's platform to be recommended or bundled into large-scale bank transformation projects. Similarly, deeper technical partnerships with Salesforce or other cloud providers could lead to co-branded solutions or integrated offerings targeting specific banking functions like credit risk modeling or regulatory reporting. There's also an emerging opportunity in the mortgage space following the Simple Nexus acquisition. As the mortgage industry continues to modernize, lenders are actively seeking end-to-end mobile-first solutions that streamline the customer journey from application to closing. With Simple Nexus under its wing, nCino can now offer a unified experience across both business banking and consumer mortgage processes, something that many of its competitors are still struggling to achieve. Mergers and acquisitions within the banking sector itself could also work in nCino's favor. As banks consolidate, they often use the transition period to reassess and upgrade their technology stacks. In these moments of change, banks are more likely to rip out legacy systems and invest in modern platforms that offer better scalability and integration, an ideal entry point for nCino sales teams. Another underappreciated area is regulatory technology, often called RegTech. With every passing year, banking regulators are demanding more in terms of reporting, transparency, and compliance documentation. nCino already plays in this space with its risk and compliance modules, but there is room to grow. Building or acquiring deeper RegTech capabilities, such as automated regulatory reporting or AI-driven compliance monitoring, could significantly boost revenue per customer and improve customer stickiness. Finally, the broader trend toward banking as a service, or BaaS, presents an exciting frontier, as more non-banking entities, like FinTech startups or even large retailers, seek to offer financial products. They will need back-end infrastructure partners. nCino, with its cloud-native, API-friendly architecture, is well positioned to become a white-label technology provider for this growing segment. In short, while nCino faces real competitive and operational challenges, the landscape ahead offers multiple vectors for growth. International expansion, AI product development, mortgage platform penetration, strategic partnerships, regulatory technology, and the rise of banking as a service all represent open doors for nCino to walk through, provided it can execute effectively and sustain its reputation for reliability and innovation. For all the growth potential nCino holds, the threats it faces are very real and, in some cases, existential. The most immediate and ongoing threat is the intense competition within the financial technology sector. nCino's success has not gone unnoticed. Large, well-capitalized players like Fee, Fiserv, Temenos, and Oracle are investing heavily in their own cloud banking solutions. These companies already have deep, embedded relationships with the same banks that nCino is targeting. They also possess the financial and technical resources to undercut pricing, bundle services, and lock clients into broader enterprise-wide software agreements. At the same time, niche startups are emerging with laser focus on specific banking functions, whether that's AI-powered credit underwriting, real-time customer onboarding, or specialized compliance tools. These smaller players are more agile and often willing to work on custom solutions, something that larger firms like nCino may struggle to offer at scale. This leaves nCino squeezed between entrenched giants and fast-moving disruptors. Another structural threat is the company's deep reliance on Salesforce as its underlying platform. Any major shift in Salesforce's pricing model, technology roadmap, or business priorities could create serious complications for nCino. If Salesforce were to launch a competing product that overlaps with nCino's offerings, or if Salesforce's own infrastructure were to suffer a catastrophic failure or security breach, the fallout for nCino could be immediate and severe. The degree of platform dependency introduces a risk factor that no amount of product development or customer service can fully mitigate. Economic cycles also pose a looming threat. During periods of economic slowdown or banking sector stress, technology spending at financial institutions tends to freeze or shrink. Banks become reluctant to take on large-scale transformation projects when capital reserves tighten or when regulatory bodies increase oversight following financial instability. Given that nCino's core revenue model depends on banks committing to multi-year SaaS contracts, a prolonged economic downturn could stall sales pipelines and trigger customer cancellations or delays in implementation. Regulatory risk cannot be underestimated either. The financial services industry is in constant flux when it comes to compliance standards, data sovereignty laws, and cybersecurity requirements. Any sudden change in global data protection laws, such as more restrictive data localization rules in Europe or Asia, could force nCino to make costly infrastructure adjustments just to remain compliant in certain regions. There is also reputational risk stemming from past legal issues. While nCino was cleared or emerged relatively unscathed from previous lawsuits regarding insider trading allegations and anti-poaching employment practices, the existence of those legal cases remains part of the public record. For highly conservative bank procurement teams, any perception of legal instability or ethical gray areas can be enough to slow down or block vendor selection processes. The challenge of customer concentration must also be acknowledged. A significant portion of nCino's revenue comes from a relatively small number of large clients. If one or more of these key customers were to leave, scale back, or experience their own financial trouble, the revenue impact on nCino could be disproportionately large. Talent acquisition presents another looming threat. As demand for skilled cloud engineers, AI specialists, and FinTech product managers continues to rise globally, nCino will have to compete with far bigger tech companies to secure top-tier talent. If they fail to attract or retain the right people, especially as they expand internationally and build more AI-driven tools, product innovation could stall at the exact moment when competitors are accelerating. Finally, broader technological shifts could make nCino's Salesforce-dependent architecture less appealing in the long run. If the banking sector begins to favor open-source banking platforms, or if decentralized finance DeFi models gain traction among mid-sized institutions, nCino could find itself stuck with a product framework that feels outdated or overly restrictive. In short, nCino sits at a crossroads between enormous opportunity and significant risk. Execution will matter more than ever. External forces, from economic cycles to regulatory shifts to platform vulnerabilities, will test the company's resilience. For investors and stakeholders, this is a company that offers both the promise of high reward growth and the real risk of disruption or strategic misstep. Thanks for watching and spending time with us here on Tech I Spy. If you enjoyed this breakdown of nCino and want to explore more, check out our other episodes, where we dive deep into other tech stocks and emerging sectors. We've also built out an entire universe of Kindle Unlimited books, each one offering even more detailed analysis, company profiles, and sector insights to help you sharpen your investment decisions. Wherever you are on your investing journey, stay curious, stay informed, and as always, good luck investing.